This segment sponsored by Foster Financial. Welcome to Wealth Wednesday, where we give you some holistic financial advice from our expert, Caleb Doane, who is the Vice President of Foster Financial. Good morning, Caleb.
Good morning.
How's it going?
It's going well. How are you doing?
Good. I'm doing good. Thank you. Okay, so a new report came out, and you have some new information for us about GDP.
Yeah, that's exactly right.
Now, first, what is that?
So GDP stands for Gross Domestic Product. It's essentially just a very broad measure of all the goods and services produced in the United States.
Okay.
So usually that's kind of the overarching statistic that people will look at for maybe the health of the United States economy, just to see how quickly we're growing.
Mm-hmm.
And of course that trickles down to how well are a lot of the big businesses doing, which is what we typically invest in.
Okay, and how often does this report come out?
Yeah, usually quarterly are kind of the big numbers that will come out. So Q1 just got released a little while ago, and it came out a lot lower than what people were expecting. So it came out at about 1.6%.
Okay.
People were expecting nearly a percentage point higher than that. So it was a pretty big difference. And so the market definitely reacted initially, pretty negatively to it. Over time, sometimes those numbers get revised and all that kind of stuff. So it'll take a while for the market to sort of fully digest all of that information. But I mean, the whole reason people are really looking at this right now is because the Fed is kind of trying to thread the needle for a lot of things. So one of their biggest goals is they really want to lower inflation. And they're doing that by raising interest rates. So making it, more expensive to take out debt and things like that. But at the same time, they're trying to not trigger a recession. So they're saying, hey, we want to raise interest rates, slow down the economy, but not slow down too much. And so anytime we get data out that says, hey, the economy might be slowing down too much, or we get data that says, hey, inflation isn't coming down like we want it to, markets react really negatively to that.
Wow. And so that definitely could impact how someone is really considering their retirement funds, what they're investing in, if they're going to be conservative or more liberal, right? Yeah,
that's exactly right. I think, it's a really good time to take a look at the risk that you're taking in your investment portfolio, because not only is it an election year, but we've got all this stuff going on with the Fed and interest rates and the economy potentially starting to slow down a little bit. And the markets have still done really well over the last year. And so we're pretty close to all-time highs, which can be a really good time to take a look and say, how risky am I actually invested in? I saw the market, my portfolio went up a lot over the last year. Is it time to sort of harvest some of those gains and maybe get a little bit more conservative?
Okay. And so with this report, how does it really impact the market? Like, what happens that people can really recognize and say, ooh?
Oh yeah. They'll definitely see the red on the screen for just the S&P 500, Dow Jones, NASDAQ, all of that stuff dropped, lowered with all the reports coming out about the GDP coming in a little lower than expected. And so I think certainly people taking a look at the risk in their portfolios is one thing to do after this. Another one is just to reassess what your goals are for investing.
Yeah.
Because a lot of times when people are working, their goal is, I want growth in my account.
Right.
And so sometimes the market going down isn't necessarily a bad thing for that goal, because you're continually buying in at a lower and lower rate. And then if the market recovers, your accounts get to recover. But if your goal is, hey, I want to generate income from my account, I'm living off of what this account is producing, then the market's going down can be a lot more impactful for you.
Right.
And so if somebody's in retirement and their goal is now income, it's even more imperative that they kind of take a look at how risky they're invested.
Yeah, and that's a good point, because sometimes people can kind of slide in while the market's low. So should they do that research in advance to kind of see, like, okay, if it does drop, this is where I would want to be more risky at, or should they base that decision strictly on this report?
I think probably the best strategy is what we call dollar cost averaging. If somebody is kind of in that accumulation phase of retirement planning where they're still working, they're contributing to an account, and dollar cost averaging is just, hey, I'm going to contribute the same amount every single week or every single paycheck, And oftentimes this is how people have it set up in their
Yeah.
401k. It just automatically contributes, and therefore if the market goes down, the $100 that you're contributing buys a little bit more because everything is slightly cheaper. And if the market goes up, it buys slightly less. And so that's one of the best strategies to kind of lower your overall, what they call cost basis, when you're in that accumulation phase. And then if you're somebody in the kind of retirement income type phase of, their retirement savings,
Yeah.
one of the things that's important is, hey, maybe ask your financial advisor, what are the strategies we're using to hedge the risk in my accounts? What are we doing to hedge against a possible recession or against, the markets having a downturn? And hopefully there's a really good answer to that. That's one of the things that I love when clients ask is, hey, what are we doing to possibly hedge against this?
Yeah.
Because then we have a whole list and we can say, hey, these are all the things that we're doing in your account.
All right. Well, you're the perfect person to ask about hedging and all of that.
Yeah.
So thank you so much for coming in and sharing about this new information.
Yeah, thank you.
And if you would like information about Foster Financial, they do offer complimentary consultations. So we'll have their phone number listed below, and I'll see you after the break. This segment sponsored by Foster Financial.